First of all, Peter describes a problem that people do have in cryptocurrency where they sell on a 1x or a 2x or a 3x and think that they're smart, and then it goes up 69 million x. So you could have bought HEX on January 5th of 2019 and sold it when it doubled, 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 when it doubled again, when it doubled, when it doubled, when it doubled, when it doubled, or when it doubled. It doubled 13 times in 2 years. And so you could have hopped off the magic carpet ride at any time that you wanted with insanely mad gains, and you could have been one of those red candles everybody hates so much. And people run into this problem when they reach cryptocurrency, they're not used to seeing millions of percent returns. HEX did 1,000,000% return from the bottom of the top, 623 days, and that's without staking. If you'd staked, you would have made 2x if you'd staked longer. You would have made less if you staked for shorter. He describes a problem where he wouldn't have known whether he would have held or not, and HEX specifically stops him from his own weak hands selling his future gains. And this happens to investors time and time again, where they try and time the market only to discover that what matters more is not timing the market, but time in the market. Time in the market with markets that have product market fit, they're on-ramping new users, they have a durable walled garden. Peter seems to think that you can copy paste a coin and instantly it's valuable. It's not true. When you copy paste a coin, you have a different ticker symbol, which means you have a different order book, which means you have different liquidity, which means you have different exchanges that it's traded on. The things that affect the price are wildly different. Now look, whether you like HEX or not, fine. I'm also solving a lot of other problems. I don't like how electricity is destroying the environment. I used to mine Bitcoin. I used a lot of electricity to do it. It wasn't renewable energy. I think Bitcoin destroys the environment. I think gold destroys the environment. I think Ethereum destroys the environment, and I've already solved that. Pulsechain.com gets rid of all the proof of work destroying the environment to maintain a consensus network and just uses proof of stake. The same way that HEX doesn't require you to destroy the environment to earn inflation rewards. It just requires you to delay gratification to earn inflation rewards. So we have less negative externalities, which is why we have a superior price chart. This is gold versus Bitcoin. Gold goes up a little bit, Bitcoin goes up a lot. This is HEX. It just basically looks like a giant up and to the right. You got to click log for it to make sense, or it just compresses everything into a flat line here, which is useless to reason about. A flat line isn't helpful in a chart. Now look at from launch. He wished that he had got in early on Bitcoin and Ethereum because he would have made hundreds of thousands of percent returns. This is HEX versus Bitcoin and Ethereum from their launch. This is the hardest possible time to try and compete with those currencies. This is when they had the maximum appreciation, the maximum up and to the right. We're beating both of them today after a 66% or 70% dip. When you zoom in, it looks like this. This is on a log scale. These are really big numbers. And so, we're up versus Bitcoin at the top, 500x. That's 532,000% versus Bitcoin at the top. Now we've dipped. We're only up 150x now, 1500x. That's why I bring charts, right? We did the same thing versus Ethereum, but Ethereum pumped harder than Bitcoin, 3 times harder. So our gains versus Ethereum are about 3 times less. I have to hide my eyes from the camera. And then this is us versus the dollar, about 1,000,000% versus the dollar. Now he's going to tell you these numbers aren't real, but guess what? They are real. When you create those red candles that everybody hates, that's you cashing out. And then you could go buy whatever Peter does like. He likes stocks that you don't own the shares to. By the way, as far as the utility in stocks go, you realize that if you get a 40% share of your local Burger King, you can't change the prices. You can't change the hours of operation. You can't add an item to the menu, and you can't pull cash out of the register. And so this concept that somehow owning shares in a company is somewhere more wholesome or better than owning part of a cryptocurrency, which may give you rights to control the consensus of the network, which may issue you trustless dividends with no middlemen whatsoever. And so I created something that solves a lot of problems that Peter hates. Peter likes self-custody. I solved it. Peter likes yield. I solved it. Peter likes delayed gratification. I solved it. But he just doesn't realize I've solved the things that he cares about. So I'm making people literal millionaires. And he says other things which aren't the case, such as some people have to lose in order for other people to win. It's not true. It's 100% not true. When your house goes up in value, who loses? When your gold goes up in value, who loses? When a baby is born or a tree grows, who loses? They're created out of thin air. Trees are created out of thin air.